And welcome back to Broader Financial Future. And today I have an amazing video for everyone. I'm going to discuss Charles Schwab SWPPX Index Fund versus Vanguard VTI ETF. Now, this was a request from one of our followers. Thank you for subscribing. So, I'm going to make this video and talk about that today and kind of compare the two in my opinions overall. But before we get started, if you're new to the channel, make sure you subscribe. I talk about dividend stocks, ETFs, index funds, and more. So enough about the sales pitch. Let's just jump into today's video. So ticker SWPPX, Schwab S&P 500 Index Fund. Now, this is actually an index fund I actually own, and this fund is only available if you have Charles Schwab. We're going to talk about Vanguard in a second, but first we're going to talk about this particular index fund. So, what is it exactly, right? This is one of my favorites in all forms. It's the gold standard. You just follow the wave of basically the top 500 US companies. So, basically, this index fund, there's a lot of index funds similar to it from Fidelity and so forth. It just basically you're invested in the top 500 US companies. That is the focus, that is the core when it comes to this particular index fund. You can see it in different names, different forms, but we're just going to talk about SWPPX. All right, so a little bit more information. This particular index fund been around since 1997, so it has a lot of history. Life of the fund, you probably see returns about 8.84% and has an expense ratio of 0.02%. All right, so in addition, it has about 508 holdings in this particular portfolio. Now, let's look at the top 10 companies. We're going to see companies like Apple, Microsoft, Amazon, Google, Meta, formerly known as Facebook, Tesla, Berkshire Hathaway, and more. So you're getting kind of like the cream of the crop when it comes to US companies. In addition, when you look at the performance, as you can see, 1 year about 16%, 3 years about 18%, 5 years about 15%, and since the inception about 9%. So overall, it's been giving some pretty good returns for its investors, right? So let's talk about VTI. So VTI is Vanguard Total Stock Market Index Fund ETF. So one of the main differences, this is the total market. So what is exactly, right? It seeks to track the performance of the US total market index, so including large company, mid cap, and small cap companies. Unlike SWPPX, this one you're getting like a broad market of basically all US companies, big, small, and in between. So, and there's more. This one's been around since 2001. Life of the fund, you're looking at about 9% return, an expense ratio of 0.03%. So that's you can see it's a little bit higher when it comes to the expense ratio. Let's look at the holdings. Because they're getting large, mid, and small companies, you're looking at about owning over 4,000 companies. In the top 10 is relatively the same. You're going to see the Apples, the Microsofts, the Amazons, the Facebook, the Googles, Teslas, and so forth. So you're really getting the top 10 companies in both, pretty much essentially, but then it starts to differ after that. If you look at the performance, the 1 year you're looking at almost 12%, 3 years, 17% about, 5 years, almost 15%, and since inception, about 9%. So the performance is relatively close in the same. Some of the main differences are, well, one, I do own SWPPX, just as a disclaimer, but some of the big differences are when you look at the two, is they're fundamentally different, but pretty similar by and large as far as the holdings. SWPPX, that one's going to focus on the 500 roughly top US companies versus BTI, which is going to focus more on a broader market. In addition, SWPPX, you have to have a Charles Schwab brokerage account in order to purchase it versus VTI. If you have Robinhood, Fidelity, Charles Schwab, you can buy this basically on most brokerage platforms for the most part. In addition, another key thing is when is an index fund and when is an ETF. So they trade a little bit differently. Um, that's going to be one of the biggest things as well. So, for example, mutual funds are priced at the end of the day. ETFs can be bought or sold anytime. So it really depends on how liquid you want to be. That's gonna break down your choices, right? Or do you want to wait to the end of the day? You're not buying and sell in real time. ETF, you have a little more flexibility when it comes to buying and selling those particular assets, and you can buy it in more places. But you're going to pay a little bit more of a premium when it comes to the expense ratio when it comes to these two particular funds. Overall, they're both great picks. You really can't go wrong with either or. It's going to come down to what is your personal preference. Looking at both funds, for me, I went with SWPPX, but I do own multiple versions of this type of fund. All right, folks. So I'm not a financial advisor. These videos are strictly for entertainment purposes only. So make sure you do your own diligence. And I definitely love to hear from you and let me know your thoughts below. Which one do you actually own? Which one do you like better? Don't forget to like, comment, and subscribe. And let me know what type of ETF or index fund video you want to see next on my channel. Until next time, everybody, have a good one. I'm out.